And Marcus, telling us about markets, first of all. What's been going on?
Yeah, we're going to be talking about stocks in emerging markets, to be specific. They've had their worst day in 5 months. The weakness comes on continued concerns over slowing growth in China, a looming financial crisis in Argentina, and political risks in Turkey. And it's not only about stocks, it's also about currencies from different emerging markets. They have been in the spotlight in the past week, and though they include the Argentinian peso, the Russian ruble, and the South African rand. They've all been trading down against the dollar in the past week due to these fears of a slowdown in emerging markets. The Turkish lira has also come under pressure, but it's snapped back against the dollar on Monday as the Turkish Central Bank announced that it would hold an emergency meeting on Tuesday. That announcement is fueling speculation that the central bank will take action to stabilize the lira. Delano de Souza has more.
Under mounting pressure, Turkey's central bank has announced an emergency meeting. Currency intervention measures undertaken by the bank last week failed to stop the lira from hitting its lowest level against the dollar. The bank has plowed $2 billion into the foreign exchange market in an attempt to shore up the currency.
In order to protect themselves, of course, they are moving towards foreign assets. So they are increasing their deposits in foreign exchange.
In 2014 alone, the lira has plunged over 7% against the dollar. Increasing interest rates is one of the tools at the central bank's disposal to fix the currency crisis. But it has been under pressure from Turkey's scandal-embroiled government not to raise rates to bolster the lira. The government is concerned that an increase in rates could further impact slowing growth.
Since December the 17th and the political issues, business has dropped off by 80%.
Our sales have dropped by 70% since the 17th of December.
Turkey's latest currency crisis is similar to market turbulence in other emerging markets. According to analysts, Turkey falls into the list of countries vulnerable to tapering measures by the US Federal Reserve as it tightens its monetary policy.
Now, we have seen those fears over emerging markets reflected in emerged markets as well over the past 4 trading days. This hour, though, we're seeing the US stock markets trading a little bit higher, though, with the Dow Jones Industrial Average. Let's see if we can get them on screen. There we go. The Dow Jones Industrial Average actually in negative territory. The S&P 500, however, is slightly above the flat line. Now, earlier in Europe, the indices closed in negative territory. European indices too, extending falls due to the concerns over emerging markets, with the FTSE 100 in London down 1.7%. Now, here in France, the number of job seekers has risen to another record high. The Labour Ministry says 3.3 million people were looking for work in December. That's an increase of just over 10,000 people. The French government pledged to start lowering unemployment by the end of 2013, but a solid turnaround is yet to materialise, as these latest figures tell us. Meanwhile, the French government is trying to get everyone singing from the same hymn sheet when it comes to an initiative to revive hiring. That attempt had a rocky start, though, when unions and employer groups gathered Monday. The French president wants to cut taxes for companies by 30 billion euros each year. In return, the government wants reassurances from companies that they'll speed up hiring. Employers, though, they want costs to come down even further, and unions, they say that they're unsure that a deal can actually be reached. And let's take a look at some other stories in brief. German companies, they're getting more and more optimistic. Business confidence in the Eurozone's biggest economy hit a 2.5-year high in December. That's according to a well-watched business climate index from research firm Institute, or Research Institute, IFO, I should say. The head of the institute says the reading shows that Germany had a promising start to the year. The hopes of turning around the Royal Bank of Scotland have taken a hit. The British lender has announced it's set aside £3 billion, or 3.6 billion euros, to cover legal costs. It includes compensation payments for mis-selling insurance in the UK and mis-selling securities in the US before the financial crisis. RBS is 80% owned by the taxpayer in Britain after a government rescue back in 2008. And Samsung has struck 2 deals to reduce the risk of costly legal disputes. The Korean maker of electronic goods has agreed to cross-license patents with Google. The Korean firm has also agreed to end a long-running patent dispute with Sweden's Ericsson. The deal will see Samsung pay Ericsson around $650 million in initial royalty payments. There you go, Laura. That's the business news for now.
Thank you very much indeed, Marcus. And we're going to take a short break. We're going to leave you with what's got people clicking and sharing over the past 24 hours. Better the web with Web News.